For the last couple of years, if you asked anyone in the GTA how the market was doing, you would probably get the versions of the same answer. Slow, soft, buyers have the power, and for a long time that was true. But the numbers that came in out of June are telling a noticeably different story, and it's worth breaking down exactly what changed, because this might be the shift a lot of people have been waiting for. According to the Toronto Regional Real Estate Board, home sales across the GTA hit 6,770 in June, which is up over 9% compared to the same month of last year. And it's actually the highest monthly sales total the region has seen in almost 2 years. And at the same time, something else has happened that's arguably even more important. New listings dropped nearly 13% year over year, and active listings fell about another 13% as well. So think about what the combination actually really means. More people are buying, and fewer homes are coming onto the market to meet that demand. That's no coincidence, and it's not just a seasonal blip either. TREB's own data shows that this held up even after adjusting for normal seasonal patterns, meaning sales rose and listings fell on a month-to-month over basis too, not just compared to last year. Now, prices haven't caught up yet, and that's the part that's confusing people. The average selling price across the GTA in June was just above $1 million, which is still down roughly 4% from a year ago. On paper, that sounds like a market that's still struggling. But here's the detail that actually really matters. The year-over-year price decline has been shrinking steadily for months. It's not stuck, it's narrowing. And when you look at the ratio of sales to new listings, which is one of the clearest signals on how tight the market really is, that number climbed to close to 40% in June, up from around 37% in May, and well above where it sat a year ago. According to TREB's Chief Information Officer, Jason Mercer, if conditions keep tightening through the second half of the year, prices could stabilize and eventually start climbing again, which would likely bring even more buyers off the sidelines. And the TREB's president echoed that same outlook, pointing that after a slow start of the year, the second quarter showed a real turnaround, and the board is expecting that momentum to build through the rest of 2026. Here in Vaughan specifically, June brought 524 sales at an average price just above $1.3 million, keeping Vaughan as one of the strongest performers in York region. And across the region, the story matches the broader GTA trend. Detached homes are still leading in volume, but condo sales actually grew the fastest of any category, up over 14% year over year, even as condo prices continue to soften, the most out of any property type. So what does all of this actually mean if you're trying to make a decision right now? If you're a buyer who's been waiting for the absolute bottom, this data suggests that the window may be closing faster than expected. Inventory is shrinking, and once prices catch up to demand, negotiating room tends to disappear quickly. If you're a seller who's been holding off because you don't want to sell into a soft market, the conditions are shifting in your favor, especially with competition for available listings on the rise. If you're just watching from the outside, this generally is one of the most important shifts we've seen in the GTA market in the last 2 years, because it suggests that the correction phase may be ending, not continuing. Nothing about this is guaranteed, and markets can shift again, but the direction of the data right now is clear, and it's pointing towards the market that's tightening faster than most people expect. If you want to read on what this means for your specific situation, whether you're buying or you're selling, reach out and we can walk you right through it together.